Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided and made available through this podcast does not constitute financial advice. The information is of a general nature only and does not take into account your individual objectives, a financial situation, or needs. It should not be used, relied upon, or treated as a substitute for specific professional advice. We recommend that you obtain your own independent professional advice before making any decision in relation to your particular requirements or circumstances. Positive Tax Solutions and its representatives do not warrant the accuracy, completeness, or currency of the information provided on and made available through this podcast.
Good morning, everyone. Welcome back for another Wealth Coffee Chat. I'm Daniel McPherson. Now, because we believe that education is the way to getting our clients better outcomes, it does mean that sometimes we have to talk about things that aren't so nice. Because business, as rewarding as it can be, it also has a dark side. The stress, the pressure, the fear of things going off the rails. And if you've ever found yourself lying awake at night wondering how you're going to pay the bills, you're not alone. So this episode is really for anyone who's felt the weight of responsibility sitting on their shoulders, anyone who's looked at their bank balance and felt a bit sick, or anyone who's felt like the business they built is suddenly turning against them. So let's also ground this into some reality. According to the ABS, roughly 1 in 3 small businesses won't make it past their 5th birthday, and over 300,000 businesses close their door each year. Now, most don't fail because of a bad product. They fail because of poor cash flow, late payments, rising costs, or just being blindsided by life. So I guess knowing this doesn't make it less painful, but it does remind us that there are challenges that are part of the landscape and you're not facing them alone. So the truth is that financial stress can break people. It can fracture relationships, impact your health, cloud your judgment, and worst of all, make you believe that you're the problem, that you've failed. So let me be clear, you're not a failure because things get tough. You only get into real trouble when you stop showing up, when you go quiet, and when you pretend that it's not happening. So today we'll walk through the signs that things might be slipping, what you can do to get back into control, and more importantly, what you can do to help defend against these risks. So this isn't just about saving a business or keeping the ATO off your back. It's about protecting your mental health, your livelihood, and your future as well. So remember this from the start. Prevention is always better than treatment. So a bit like your health, your finances and your business need proactive care. So waiting until the bleeding starts is often too late. And today is about recognizing that you can take action early before the mess becomes a crisis. So I know sometimes it's not even your fault. Businesses don't fall apart just because someone made a bad decision. Sometimes life throws you a curveball that completely derails everything. So whether that be a serious personal family health issue, relationship breakdowns and divorce, natural disasters, floods or fires. We've had a few of those in Queensland. Major customer going bust or refusing to pay, a cyber attack or system failure that shuts down your operations, regulatory changes that suddenly make your business model less viable. So these events can hit hard and fast and often have nothing to do with how skilled or committed you are as well. So they drain cash, distract attention, create a heap of emotional upheaval that affects every part of your decision making. So that's why it's important to plan with the assumption that unexpected events will happen, because at some point they most likely will. So don't wait until you collapse physically or mentally to reach out. Just as you'd go to your GP before the chest pain becomes a heart attack, speak to someone, an advisor, mentor, or friend before that financial stress really hits boiling point. Now, unless it's a sudden catastrophe, there are usually early warning signs. Now, these warning signs are the smoke before the fire. It can sometimes be difficult to spot them without really taking a step back and looking at your business from a third-person view without the emotion. So some of the signs that will pop up are your cash flow forecast is blank or it hasn't been touched in months. Your ATO obligations are falling behind, so late BASs, unpaid super, ignored reminders. Payments are late to suppliers, staff, landlord. Short-term finance becomes normal, so using credit cards, overdrafts, sort of those high-interest loans. You're not drawing a wage for yourself and haven't for some time, and you're doing the avoidance behavior where you're dodging emails, calls, and conversations with people that you don't really want to have that conversation with. So spotting these signs early and responding. So it's like having, I guess, the engine light on your car come up before the motor seizes. Don't ignore the symptoms, and acting early means you've got more options, a lot less stress, and you'll recover faster. When the pressure is on, managing cash effectively becomes your number one job. So it's not just about squeezing every dollar. It's about making intentional and strategic decisions to buy yourself time, give clarity, and more options as well. So in crisis mode, we consider these tactics, which are having at least a 13-week cash flow forecast. So this is the short-term rolling plan that gives you real visibility. What are you spending? What's coming in? What can be pushed back? And need to update this weekly. You need to do scenario planning. So model a couple of versions of the next few months, worst case, base case, and best case. So this kind of prepares you financially and emotionally as well. Having a daily huddle. So even if you're a solo operator, take a few minutes every morning to assess the cash, what payments are due, and what critical actions you need to take. Appoint a crisis advisor, so someone who can sort of remove the emotion from the decision making. This might be your accountant, business mentor, or maybe sort of another consultant that you have. Review your pricing and margins. If you're undercharging or bleeding margin, it's time to fix it straight away. Raise prices, drop less money-making clients, and sell higher margin services. You want to communicate proactively, so let your staff, suppliers, and creditors know that you're on top of things. A lot of the time, transparency can buy you time and preserve relationships as well, which is really important then for when things get back on track. Make the most of your network. So letting clients and partners know you're open to new work or collaborations. Sometimes unexpected income can come from a well-timed conversation, and refinancing smartly. So if you're paying a high interest on short-term debt, maybe refinancing to a lower rate or consolidating your debts could give you a bit more breathing room. So these tools don't just help you survive, but they also give you a bit of clarity and time to think strategically rather than react emotionally. So when you're in a crunch, cash is everything, and you need to think survival, not scaling. So A couple other ways to, I guess, help defend your runway. You've got splitting your accounts, so having your separate GST, super, and wages accounts. So making sure that you're not accidentally spending funds that you don't really have. Doing those daily check-ins to review what's coming in, what needs to go out, and what absolutely must be paid. Making sure you're sending invoices immediately. So if you're billing late, you're also getting paid late. And also negotiate terms. So call your suppliers, call the ATO, set up payment plans, and kind of relieve a bit of that pressure. And pause the non-essential spending. So any software that you don't use, contractors that aren't critical, and projects that can wait as well. Now, if you're an investor, that might be sort of looking at doing rent reviews, talking to your property manager, where can costs be contained or vacancies resolved faster? Can you do interest only for a period? Or what are your strategic exit options? So it's really about looking at what the options are. So remember, cash flow is a symptom of behavior. If your bank balance keeps going backwards, then it's time to fix the system, not just to patch the outcome. Okay, so let's shift for a moment and talk about a major trap that catches out far too many company directors and company owners. So even those who think that they've done the right thing, it's one of the ATO's most powerful weapons, and they're using it a lot more often at the moment, and it can be a financial landmine for anyone running a company. And it's called a director penalty notice, or DPN. And if you don't know what it is, or you've been ignoring your company's tax lodgements, now this could be the wake-up call that you need. So a director penalty notice is a legal notice the ATO can issue to make you, as a company director, personally liable for certain unpaid company debts. So these usually include PAYG withholding, so your employee's income tax, superannuation guarantee, and also GST, which is becoming increasingly more common. Now, there are two types of DPNs. One's a non-lockdown DPN. So this applies where the company has lodged its BAS and super on time, but hasn't paid. So you'll have 21 days from the date that the notice comes to you from the ATO that you need to take action. So that's either pay the debt in full, appoint an administrator, or start a small business restructuring process. So if you act in time, you can avoid personal liability. Now, the second one is a lockdown DPN. So this is where things kind of get a bit scary. So if your company hasn't lodged its returns within 3 months of the due date, the ATO can issue a lockdown director penalty notice. So with this one, there's not really any escape. The liability is automatically yours, even if the business is later liquidated. So what does this mean practically? It means that your personal assets, your home, your bank accounts can all be targeted. The ATO can initiate legal recovery action against you as the individual, which ultimately could push you towards personal bankruptcy as well. So the message of this is, even if you can't pay, always lodge. So lodging keeps the door open for payment arrangements and restructuring, and not lodging slams it shut and puts a target on your back personally. So again, prevention is better than treatment. Stay on top of your lodgements, even when things are tight. It could mean the difference between temporary pain and long-term damage. So as I said before, talking about the small business restructuring. So if your business is viable, but maybe drowning in historical debt, the small business restructuring process might be a potential lifeline. So I guess just briefly how it works is you keep control of the business, unlike a voluntary administration where you're handing it over to a liquidator. A restructuring practitioner will help you propose a plan to your creditors. The creditors vote. If more than 50% approve, then it's binding, and you keep trading throughout the process as well. So there's no need to shut down and restart. So there are some eligibility criteria that you need to make sure that you are eligible for it. You definitely need to be up to date with all of your employee entitlements and tax lodgements, and the company can't already be in liquidation. So it's somewhat of a new thing that's been put in place to support businesses that are fundamentally viable but overwhelmed by past debt. So again, prevention is better than treatment. Act early and you'll have more options on the table. But I guess before you get to crisis point, it's best to build your moat. So keep saying it again, prevention is better than treatment. So these are the defensive strategies that you need to help you sleep better, act faster, and avoid disaster, really. So the number one thing is getting your structures right. So this is separating your risky business activities from your assets. So using things like discretionary trusts, companies, and even your spouse to isolate risk and separate assets. Making sure that you're keeping your ATO lodgements up to date. Lodgement buys you flexibility. If you don't lodge, you lose the ability to negotiate, and you also risk then the director penalty notices. Number 3 is you want to avoid personal guarantees wherever possible. So make sure you read the fine print on leases. It might be having to put up an extra month or so bank guarantee. Look at your financing agreements and your trade accounts as well to see whether they have personal guarantees on them. Building up a cash buffer, aim for sort of 3 to 6 months of core expenses. So you're not really hoarding, you're kind of buying decision-making power. So having that off to the side knows that you've got the buffer to keep going through a crisis at any point in time. And owning assets in low-risk entities as well. So this goes back to structure somewhat, using your trusts, self-managed super funds, your lower-risk spouse to hold your home, or potentially other investments as well. And you want to insure against the unexpected. So that might be key person insurance, income protection, business interruption insurance, having those things in place. And also regularly reviewing with your advisor. So not waiting for end of financial year. That's more like using the rear view mirror to steer. So we don't want to do that. And for investors, don't overextend. Plan for any rate rises, vacancies, or maintenance. So have that all in hand and run the scenarios. So I guess none of these things are overly glamorous, but that's what separate businesses to weather the storm or the ones that go under. So it is really important that we know what we can do. So everyone hits a wall. Every business has a storm, and what matters is how you respond. The ones who make it don't always do it alone. They ask for help. They get advice, and they make sometimes painful decisions, but they make them early. So you're not your debt. You're not your worst month. You are the decisions that you make now. All right. Thanks, everyone. I hope you learned something, and have a great day. See ya.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6 Star team here at